It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by firsthourtrading.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be learning all about the Doji, a single candlestick reversal pattern that's easy to spot and to interpret. Without further ado, let's begin. First, a very brief review of candlesticks. We covered the basics of candlesticks in our September 25th, 2013 episode, Trendline Analysis. Candlesticks tell us the opening, closing, high, and low prices for the day, as well as whether the stock was up or down from the previous day. This image shows the four basic types of candlesticks. If a candlestick is black, it means the stock closed higher than the previous day. If the candlestick is red, it means the stock closed lower than the previous day. An open, meaning not filled in candlestick, means the stock closed higher than it opened. A filled in candlestick means the opposite, that it closed lower than it opened, or it opened higher than it closed. Now here's a doji. A perfect doji has an opening price equal to its closing price. In reality, the two prices don't need to be exactly equal, but they do need to be very close. Dojis work best as reversal patterns. In order for a pattern to reverse, it needs to be in a trend to begin with. Therefore, a doji within a downtrend is most commonly a bullish reversal, and a doji within an uptrend is most commonly a bearish reversal. Let's take a look at a couple examples. In this example, SLV was in an uptrend, but then it had a doji on April 28. The stock had a bullish bias. The bulls were winning, and that's why the stock was trending higher. But a doji shows that the tug of war is changing momentum. Bulls and bears fight it out, and whoever had been winning can only manage a draw. That should be indicative of things changing in the future, and it was on this chart. Here's an example of a bullish doji reversal. On August 16, the stock started to trend lower. But then there was a second doji predicting a quick two-day reversal before a third doji signaled the reversal to a downtrend. In order to be reliable, dojis must occur within the context of a trend. Here's a recent chart of SLV. There are many dojis on this chart, but most of them are out of context. The earliest doji on this chart did occur within the context of an uptrend, and that should have signaled a reversal, but it didn't. No chart pattern is a 100% perfect indicator of the future, and the doji is no exception to this rule. The final candlestick on this chart is a doji, but since it's outside of the context of any kind of trend, this doji probably won't be very reliable. Dojis have opening and closing prices that are roughly the same. This gives the doji candlestick no body. But what about its legs or its wicks? Two terms meaning the same things, indicating the high and the low of a candlestick. The legs or wicks can be of any length, including no length at all. We'll take a look at some special examples of dojis on the next slides. This is a Dragonfly doji. As you can see, the stock opened, traded much lower intraday, and then bounced back to close at or near its opening price. This is most likely to occur at the end of a downtrend. Here, the bulls score a moral victory, bringing the stock back from its lows. The momentum is turning. This is a good indication of a bullish reversal. In the case of a gravestone, the opposite is true. The stock opens, shoots higher intraday, but falls to close at its opening price. This normally happens at the end of an uptrend, and here the bears can smell blood. Their momentum is turning, the bears are winning. This is time to sell or short your stock. In conclusion, dojis are simple and easy to spot single candlestick formations. But despite the fact that they are single candlestick patterns, you still have to view them in context. A doji on its own tells you nothing. You need to read dojis in the context of their trends. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.